Good morning. Welcome to Morning Call. I'm Lata Venkatesh. With me are Sonia Shenoy and Anuj Singhal. We don't mean any hint to the market by the color of our attire. It's a red tie. There's a red handkerchief as well for Anuj. And, well, we are in shades of red, but absolutely no direction meant. Nevertheless, the early morning reports we're getting from Shanghai are not looking too good. It's a 2% cut. And this is because of a report that's pretty reliable. It's a Financial Times report that says that China may stop these direct and very controversial interventions of buying shares, state-owned companies buying their own shares, that they might do other things like trying and finding out people who are destabilizing the market. So if that direct help doesn't come from the government or from the state-owned firms, that market could go down a bit. And on that news, you're also seeing actually the Dow futures lose a bit. So things are looking a little eerie as far as the global reports are concerned. And CNBC's exclusive with Stanley Fischer at Jackson Hole also indicated that September rate hike is marginally alive. He was very clear in his statement that I cannot say whether the case for rate hike in September is less compelling or more compelling. And next week's data, as he was speaking on Saturday, next week's labor data will be very important. So non-farm payrolls assumes more importance than ever before. All that confusion keeping global markets a little under the weather. Not the best of places to start.
Oh yes, definitely. I mean, I would be happy to actually see a rate hike from the Fed. At least that will give you an indication that growth is not as bad as what we're seeing at the moment. But, you know, Lata, I think you're right. One more leg of a downside is remaining in the markets because of the global volatility. But the good part for our markets is, at least on Thursday and Friday, the selling from FIIs and DIs has stopped, from FIIs particularly. So we saw a small buy figure, but a buy nevertheless, 56 crores in the cash market. There was quite a bit of buying once again seen by domestic institutions, so almost 900 crores of buying seen by domestic institutions on Friday. But you still get a sense that the market is in a corrective phase because there was no major delivery-based buying seen in any stock, except maybe Infosys, which saw 250 crores of delivery-based buying, and it was mostly short covering that we saw on a lot of names that led the Nifty back to 8,000. But just to get back to what we're looking forward to today, there's of course the Q1 GDP numbers that will come in post-market hours. But before that, do you think that the global volatility and the downside pressure could get to our markets?
It does look like today the world is going to impinge on us, at least to some extent. The market will take a lot of succor from the fact that the FII selling has stopped. That's a very, very big selling number which the market had to contend with, and the fact that that abated will be a very big good news for the markets. But really, you may have to take a day at a time. The US markets didn't give you the impression that the global volatility is over and done with. So there could be a bit of a tail of that volatility. There is some positivity in the way Rajan spoke in Jackson Hole to CNBC. Again, a CNBC exclusive. We'll play out that bite to you. It's all important. Where he said in no uncertain terms, I've never seen him say it so clearly, that we are not done with cutting rates yet. Now, anybody who looked at the crude prices and at the July inflation would have concluded that a September rate cut is coming. But nevertheless, when it comes in such unimpeachable terms from the Reserve Bank governor, who's normally not used to giving hints so broadly, this is quite clearly talking up the market to some extent. So the markets could beat the global blues, at least in the beginning, with that FII number and with the statement coming from Rajan. Other data is not very good. The credit offtake is bad. But I think the market knew it. The credit offtake number came in at a 20-year low of 8.6%. Now, that's pathetic. But we must not overstate that number. It will be a 20-year low any which way. It was a 20-year low even last quarter, actually. But we must remember that this time around, the oil companies are not borrowing at all. They are huge working capital borrowers up until last year because the price of their raw material was higher. They were not allowed to charge, and it was only end of the year they got some subsidy. So they had to manage with working capital. That number has gone out. So obviously the loan growth looks small. And then even if you're an automaker, for instance, what you paid for steel last year, even for the same volume of steel this year, would be much less because the price has fallen. So, you know, the loan growth number is looking extremely pessimistic. It need not be interpreted as that pessimistic. I think the market will see through that. So my sense is I wouldn't be surprised if the markets opened a little better than the rest of Asia. But really, Anuj, your call on that.
Well, Lata, I think this is a hugely significant week. I right now won't be taking any call on the market because this is a market which could go either way. It could go to 7,800 or it could go to 8,200. The FI buying was significant because the volumes were also high, at least in terms of cash market, and of course DIs have been buying. I think what's really significant Q this morning is that consensus is turning negative on India. This morning I've seen 3 or 4 brokerage reports downgrading India, cutting Sensex and Nifty target. When Sensex and Nifty targets are cut after a 15% correction, that's a classical contra-indicator to go out and buy. When the consensus turns positive, that's the classical indicator to go short on the market or book profit. This time around, because the market has already fallen 15% from the top, and now you're seeing, Sensex, one brokerage has a Sensex target of 22,000. One brokerage has cut the Nifty target to 8,500, thereabouts, or even lower. So all of this is telling me that maybe in the near term, the market could see a bit of a rally. That could be a bit of a contrarian indicator for our market. The other thing is that on Thursday, the indication was that we'll have a suckers rally. And what you saw on Thursday was short covering. On Friday, first half also, you saw quite a bit of rally. If this was indeed a suckers rally, it would have sucked in a lot more people than it did. It actually, topped out at 8,100, and then Friday you actually saw the Nifty's closing was at 79.80. It's the averaging that got Nifty back to 8,000, 8,001 thereabouts. Again would have gone, that would have again got a lot of doubts in the market, market's mind that whether indeed the market is going to go negative. My sense is that you may not have a one-way negative journey from here on for the market. This market, in fact, on the contrary, there is a risk, and I could be wrong, there is a risk of this market actually giving you a 300, 400 point bounce on the way up, then sucking in a lot of people, even if the market has to again go back to test the previous lows of 7,800. The 7,800 number remains important because by the intraday you fell to 76.70 also. For closing, the low was 7,800, 77.90 thereabouts. So you can say 7,800 for now remains a bit of a near-term bottom. How should you play this market? I mean, if you deployed some money in the last correction, maybe if the market goes back to 7,800, you deploy another 10% in this market for long-term portfolio construction. That remains the only way to play this market. The other thing that makes me slightly more constructive on the market in the near term is what happened with the FI data in the index futures and options. At the start of a series, if you buy so many index futures, 2,500 crores of index futures buying, and if you segregate the data, 1 lakh futures were added on the long side and 11,000 index shorts were covered. But on day one, you're buying index futures, index longs. That means you're slightly more constructive on the market. So that makes me a bit positive on the market. There was quite a bit of buying in index options as well, mostly in index sports, but those index sports were bought as a bit of a preparing yourself for extreme event. What if the US market goes through a big decline and our market has to follow?
What calls were bought?
So the puts were bought were 7,600, 7,200, 7,300.
But where were the calls bought?
Calls were at around 8,300. Calls was more of writing than selling, than buying. Thereabouts 8,300 thereabouts. Whatever rally will have is likely to be a technical rally for this market, maybe a bit of a counter trend rally. But the counter trend rally itself may not be done because it won't last all of 2 days. That's the only sense that I get, that maybe there's some more left in this market, even if after that the market has to fall. The put buying was mainly to prepare yourself for any kind of extreme event. Extreme events are not ruled out in this market.
So you think there is an upside waiting to happen only for more people to get sucked in?
Unless you see, a big decline in US markets. For example, if Dow falls 1,000 points,
then all bets are off.
Then all bets are off. Short of that, you do get a sense that this market has some positive left, some upside left.
And some downside as well.
A lot of downside maybe, but for the near term, my sense is that I won't be surprised to see the Nifty at some point, around 8,200. Even if that rally gets sold into, it will suck in a lot more people than it did on Thursday.
So the second half becomes important because in the US, a big conversation during the closing bell on Friday was that the US markets have crossed death cross. The Dow Jones, the 50-day moving average has gone below the declining 200-day moving average, which apparently is a bearish indicator that they haven't seen since August 11th. So people were making a lot of noise about it. So I don't know whether, and that along with this Chinese news now indicating a Dow futures of 100, 200 down. I don't know how bad it can get. These are extremely, futures are never very sober things to watch at. They're pretty eccentric and volatile.
And they change through the course of the day before opening as well.
Exactly. And you know what? The till the time the US markets keep behaving like, a high beta stock, the market is not going to find any stability. You want to go through a period of, a week, 10 days where the US market does not do anything. That I think would be a far better scenario than seeing this 300, 400 point kind of intraday jumps.
All right, so brace yourselves for a lot of volatility this week. But as we head into trade this morning, we could start with the downside because that's what the SGX Nifty is suggesting early this morning. But here's what you'll get to see on the show today. August was a torrid series for the market, but is the weakness likely to carry forward into September?